Well, hi traders, it's time to put the US Q4 24 earnings season firmly on the radar. Of course, the prospect of increased volatility both at a single stock and an index level now becomes real. And of course, making life a little bit more challenging is what's happening in global macro, where we're seeing 10-year treasury yields moving up on a broad basis. And we're also seeing a stronger US dollar. We're seeing some vulnerabilities in equity markets, poor breadth. And of course, we've got the VIX pushing up into 20%, while Brent prices and WTI prices have moved up about 14% from their recent lows. And of course, this coincides with Trump's inauguration in his first 100 days. So whilst earnings season is about to get going, we are going to see a lot more noise coming from the Trump start of his era there. Now, of course, as we go through earnings season, we are going to see the banks leading us off. They're going to set the tone. We're going to have to watch what happens in the big banks like JP Morgan, for example. We are watching for a positive performance coming through their investment banking division. Their earnings are expected to be strong, but of course, we're watching asset quality, loan provisions and various factors. Going into the following week, starting the 20th, we're going to see about 13% of the S&P market cap report. Probably one of the big ones for traders is what's happening in Netflix, where the market's expecting about an 8% or 9% move up or down based on what's happening in implied volatility. Going into the 27th, the week starting, that's going to be the big week where we're seeing about 40% of the S&P market cap reporting. Names like Tesla, Microsoft, we're going to be seeing Apple, Google, Amazon, those kind of names coming out with earnings. And certainly the implied volatility in some of those stocks is fairly high. It's going to be Nvidia that come out at the end of the reporting season on the 26th of February, where the market's expecting about a 9% move up or down. Again, the crowd favourite. Certainly the market really likes to trade that one. And of course, all of these stocks can be traded on our 24-hour share CFD offering. So if you want to trade the pre-market or the post-market and get access to what's happening in the news, do have a look at our 24-hour offering as well. So it could get pretty volatile there. So what should we look out for as traders and investors to really drive stock prices and drive the markets? Well, first of all, in terms of expectations, the market, the consensus is that we see about 4.7% revenue growth for the S&P as a collective. Most of that revenue growth is certainly going to come from the tech side of things, where the market's expecting about 11% revenue growth going forward. If we have a look at EPS growth as a collective, the market's expecting about 12% EPS growth. And certainly we're going to see that from financials, where EPS growth is expected to be up 40% on the quarter year on year. And certainly on the decline, the biggest contraction is going to be seen from the energy sector, where the consensus we're going to see about 26% EPS declines going in that situation. Any stock that's really had a good run and is trading at valuations, given this macro backdrop that we've got, obviously is going to be taken to town, and they're going to be punished probably far harder than we've seen in prior quarters. Of course, we are looking at a situation where companies will be displaying exactly how they're going to be managing Trump 2.0. We're talking about tariffs. We're talking about how they're seeing regulation unfold going forward, and obviously tax cuts and other factors there as well. But I think specifically it's around tariffs. Those high import businesses, how are they going to be looking to manage their margins going forward? Will they passing some of these tariffs on, and will they actually be able to quantify that? The level of outlooks is going to be interesting. Now, not all companies in the S&P provide outlooks. Of course they don't. But I think in a situation, those companies that would traditionally give strong outlooks and defined outlooks, if they refrain from doing so because the macro under Trump and various factors is slowing down and not giving them the visibility, again, I think they'll be impacted by the market. We're going to be having a look at the Mag 7 plays versus the rest of the index. Now, of course, in 2024, the Mag 7 plays really outperformed the market. They put about 56% of the 25% total return and saw in the S&P. And that's because they had the far higher earnings growth going into that situation. Now, in terms of revenue and in terms of earnings growth, those Mag 7 plays, we still expected to see significantly higher earnings growth relative to the other 493 other companies in the S&P. But that earnings growth is contracting and it's coming in. It's mean reverting, so to speak. And that means potentially over this year, will we see those Mag 7 stocks continuing to lead the charge and putting in the points, or will we see better breadth coming through in the market? So we are watching that very closely. Also, we're going to be looking specifically in the AI names, those companies that have really invested heavily into AI. Will we start seeing them being able to monetize that? Will we see that investment giving them a return? Again, that's something we're looking for. The US dollar in the last quarter rallied about 8% or 7-8%. So will the stronger US dollar play very much into those earnings calls as well? There's a lot to play for in this as well. We want to understand what's happening with the health of the consumer, really coming into some of those banks. We're going to be looking at what the retailers are saying about the health of the consumer and how that feeds into the picture as well. So it's a lot to play for. We've got bottom-up factors meeting a challenging macro environment. It suggests that we are going to see some single stock volatility playing through. So if you want to learn more about trading 24-hour share CFDs with Pepperstone, click on the link for details or reach out to the team here at Pepperstone.